What is going on YouTube? Hannah back making another brand new Crypto TV episode. In today's video, we are going to be looking at XRP, Ethereum, Bitcoin, as well as the S&P 500. And on the topic of the S&P 500, we are going to be looking at a few different articles that I do have pulled up. One being the fact that the stock market is continuing to correct lower. We'll see how today opens, but we're also going to be talking about the Fed's plan to reverse the balance sheet, how that's going to ultimately affect the overall market, and then that ultimately should affect cryptocurrency. You can see here an article that was just put out a couple of days ago talks about the unwinding the Fed's balance sheet may create chaos for stocks, and we are going to be talking a little bit more about that, as the unwinding hasn't necessarily started just yet, but it is planned soon, and we're not entirely sure as to, and I don't strongly believe that just because we're increasing their Fed rates means that the markets ultimately are going to correct downwards, because I've shown and proven that even though Fed rates have increased, we've seen the stock market also increase as well. So that doesn't seem to be the factor that ultimately affects the stock market and maybe ultimately affects cryptocurrency. But selling off the Fed's balance sheet might ultimately impact the stock market, which could impact cryptocurrency. Now, in regards to the cryptos, what we have to look at today, which is super important to me, is the fact that over the weekend, XRP has managed to hit its rock bottom, its lowest point within the descending triangle that we've been tracking here on the weekly charts here. It's been over a year. You can see this major descending triangle. We've once again retested the major bottom support, 59 cents. We've been calling this bottom since we got rejected off of March 29th. You can see we've then had a beautiful correction all the way to the downside. Not only have we made a long-term call over a month ago talking about how this is a short opportunity, depending on the exchange you use, you could short this for the long term with very low leverage, allowing you to stay in the market for this long here, shorting it to the downside all the way from 86 cents to the downside here. And we've also talked about, for the people that are new to the channel here, multiple opportunities to get in and short XRP to the downside here. So we've had a lot of variables to talk about, but ultimately we've been bearish. But here we are retesting a bottom support now. This is now the projected level that we finally hit. We're currently oversold on XRP's daily, and we are in some very peculiar waters. So we do have to talk about that, as well as Ethereum and Bitcoin here, which are in some interesting formations as well, descending fractals here. And we kind of have to see how exactly these markets are going to play out. With that being said, guys, today's video is brought to us by MARGEX. Hopefully you guys remember MARGEX. MARGEX is the previous sponsor here on the channel. As you guys know, MARGEX is a reliable way to trade cryptocurrency. It's just another way to exchange your cryptos. Mainly, they're not a spot trading platform. They're really only a leverage trading platform, but what they do offer is their MP Shield system here, which pretty much helps protect clients from drawbacks of price manipulation and often triggers unfair liquidation on other platforms here. So super cool, just showing you guys another option that you guys can check out and test. But more information about MARGEX will be at the end of today's video. With that being said, guys, definitely make sure to smash the like button, turn on post notifications, subscribe, and let's dive into today's episode. So guys, first and foremost, I'm going to talk about XRP and the cryptocurrencies. Then we'll look at the S&P 500 articles that I do have pulled up. But before I do that, with the S&P 500, it's currently 9:10 a.m. Markets open in about 20 minutes here. We have to see where exactly the S&P 500 moves to. Now, not to say this is going to happen, but, with hope, I do hope that the markets do kind of rebound off of here and get back above this purple support, and we kind of just trend sideways or maybe start to skew upwards, not necessarily continue the dump lower. I really don't want to see the markets really dump. Nobody wants to see the markets really dump. If it does, it's going to cause Bitcoin to fall to like 30K. It's going to cause XRP to fall to like 40 cents here. A lot of the cryptocurrencies are just going to get, sucked down. However, we are in extreme fear for these cryptocurrencies. Every crypto is pretty much at the extreme fear index, which is a good sign to buy in. Warren Buffett says buy into the markets when everybody is fearful of the markets. I like to think that everybody now is fearful of the markets, which is a good opportunity to be buying in. So looking at these markets overall here, XRP specifically, we did bottom off. I just want to show you guys something here. On the weekly charts, this was a big impact of what we needed to talk about. This week is probably the most critical week, as I said yesterday, for XRP. And the reason being is because we have this candle here consolidating right now. This week was important to see how we closed. As you guys can see, we closed yesterday above this major support at 59 cents here, which implies applies very similarly, and I'm basing this off a couple months ago back in January here, this reference. So just like before, we had this candle, we closed above, and then the following week, which is this week we're currently in, consolidates here and basically decides where we're going to be moving to. If we close the weekly below here this week, we're going to see a major dump. If we close above here this week, we're going to see most likely a reversal to the upside. So this week is starting off pretty good. I'd like to see how we continue to play out this week. If we can close this Sunday above this support here, then I would likely believe that we're probably going to see the markets maybe reverse up. Not some bullish crazy run, but at least up to 75 cents. That would be the target, and we'd put maybe a long position in. Obviously, we'd have some implications with the moving average here and the moving average here, and this downtrend here. But if we can break through the green band here, and we can break through this top resistance here, the downtrend, we'd most likely be able to head up to 88 cents. We break through there, we're going to be heading up at some pretty substantial levels here, but the buy-in opportunity would pretty much come in at the end of this week, how Sunday markets close. Now, what I do think might happen, we have to pay attention to, as you can see, we've managed to consolidate all the way back down to where we're currently trading right now. You can see we managed to consolidate all the way back down. It sent us into oversold here, and you can see we are currently oversold on the daily charts, on the daily RSI, and we're actually starting to reverse off of this support level right here. The only reference that I have to this is back in January here. You can see end of January into February here. All the consolidation that typically takes place on this support level. And there's a good chance that that's going to happen this week, maybe even next week, until we get a definitive answer as to maybe we'll start to see a run to the upside off of here, very similar to what happened here. But you can see this is a very dangerous level that we play around with. If we close below the support, it basically sends us spiraling to the downside here, probably seeing 20-30% drops, which in a market that's already fallen about 45% on crypto, to see the markets drop 70% is pretty outrageous here. It would be some good buying opportunities, but it would be very, very, very unfortunate to see that. And I think what's most likely going to indicate a drop to the downside here would be how the S&P 500 starts to close this week. So we have to pay attention to that. So I'm hoping for a recovery. Everything is screaming recovery, or at least consolidation. You can see we were oversold ideally at the beginning, as we are currently now, but then we do consolidate back up. It does allow us to move the RSI back to the upside here, at least out of the extreme oversold and just at the oversold levels. And then we see that rebound here. So that's what we're looking for right now. You can see right here, and we can always check out what happened here. It was a recovery, I believe, with the S&P after like January here. Where was it? January here. We recovered all the way down to here. This was the end of January. Just for reference here, so you see the S&P 500 end of January into February was oversold, as well as it consolidated here. Very similarly with XRP, markets dumped, we consolidated, and then we had this big run. This is the same exact time period, end of January into early February. S&P 500 end of January into early February was also oversold, and you can see it caused a reversal immediately after that. Yeah, we still spiraled downwards, but a reversal was necessary. So being that we're in a very similar standpoint here, a lot of signs indicate that we're going to see a reversal. I'm not going to buy in yet, but it is something that I do think is a big possibility. Unlike when we were over here, which was just a bearish correction right now that we had thought of, the fact that we've now bottomed off kind of screams, and I think I'm more like 70-30 on a bullish side and a bullish reversal to the upside. Obviously, it all depends on how exactly the S&P 500 moves. I think that's what's really going to indicate movement within XRP right now and the rest of the markets here. So as you guys can see, we're bottomed off. We're oversold on XRP. I ideally think we'll probably see a reversal, maybe consolidation, then a reversal. You can see Ethereum has also started to crack downwards. These descending fractals here are bullish bias. They have a bullish bias. They typically tend to break bullish. So I'm also looking for that pattern to happen. Bitcoin as well is in this bearish descending fractal here, which typically has a bullish bias for a reversal here. And you can see we're very low on most of these cryptocurrencies in regards to the relative strength indicator. So we'll see how exactly they play out. And you can see for the S&P 500, we're also very much close to being at the bottom here. So I'm also looking for a bullish reversal, or just to get us back up and recover some. I hope that this week we don't consolidate lower. If we do, we're going to hit 17, 18, 19% down, which is extremely oversold, and I will most likely be buying in at the bottoms here, because not only will we will it be oversold on the daily. It's also the first time since 2020. You can see here, since 2020, where was it? The the pandemic drop that shot us into oversold territory. If we pull back down to this support level here inside the weekly moving averages, will be oversold on the weekly, which is just a beautiful opportunity to be buying in and longing the stock market to the upside. Now, just to wrap up the markets here, I do want to show you guys these articles, and I will talk a little bit more about MARGEX. You can see, because we're starting to dip lower here, there's an article that talks about the fact that the stock markets are starting to decline. I highlighted right here, it says the Fed is also expected to formally announce that it will begin quantitative tightening on rolling assets off of its $9 trillion balance sheet. What does that look like? How do we have $9 trillion? Well, showing you guys, this is the total assets of the Federal Reserve. You can see in 2020 here, where we started from, the quantitative easing, we're now going to do quantitative tightening. But you can see here, since 2020, we've injected so much freaking money. We had $4 trillion at the start of 2020. We now have $9 trillion at the mid of 2022 here. We've doubled the amount of assets that the Federal Reserve holds, which is too much because of the pandemic here. So what can we expect to happen when the Fed starts to sell off some of its assets here? Well, I do have this article pulled up, which talks about the unwinding of the Fed's balance sheet. And you can see I highlighted here what exactly happens. Now, it may not be by chance that the S&P 500 peaked in early January. As you can see, that's what happened. We peaked right here. Early January peaked, mentioning the top point, and we started to correct. We haven't been able to head up higher since the beginning of January here. Around 2 weeks after the reserve balances peaked. So really, they stopped hoarding cash. They stopped collecting it. So we see the Federal Reserve balance sheets stop right here, as well as the markets peak at the same time. So it may not be by chance that the S&P bottomed in early March, nearly 2 weeks after the balance sheet bottomed on February 23rd. Now, it says it could very well be the case that the reserve balance dictates where the stock market is heading, with a 14-day lead time. When adjusting the chart with the reserve balances forward by 14 days, the S&P 500 and the reserve balances match up rather nicely. The sharp plunge in the reserve balances over the past 2 weeks suggests the S&P falls by quite a bit over the next 2 weeks, perhaps giving back nearly all of its recent gains. So you can see they've moved this. They've moved this and made it identical 2 weeks forward, the S&P 500. And when the Fed starts to sell off their balance sheet here, the markets 2 weeks later start to correct downwards as well. Very identical, very similar. You can see one reason I think this may be happening has to do with the relationship between the Federal Reserve balance and margin levels. Historically, margin levels tend to rise with the reserve's balance sheet and fall when the reserve balance fall. Now, it isn't to say this is a perfect correlation, but one that could easily be monitored over the next couple of weeks to see whether or not the relationship holds together. A simple test will come over the next 2 weeks if the S&P falls sharply, as indicated by the drop in the reserve balance sheets, and continues to work after that. It suggests that once the Fed does start to reduce the size of the balance, the stock market could fall sharply, or at least until it finds such an equilibrium where investors find real value in stock prices. So who knows? They're now just starting to sell off the balance sheet, which means we might see the stock markets fall even lower, which would be pretty nuts. And if it does, then just unfortunately, I do believe we would be extremely undervalued, but inside this 11-year ascending fractal here on the S&P 500. Otherwise, guys, that's going to wrap up today's video. I do want to talk a little bit more about today's sponsor, MARGEX, with you. All right, guys, I want to give a huge shout out to MARGEX for sponsoring today's episode. As with all cryptocurrency projects, please do your own research and never invest anything you can't afford to lose. So guys, MARGEX's goal is to provide traders with a world-class user experience, a fair, secure, and easy-to-use trading platform with the highest class of financial technologies in the world. Now, MARGEX is the go-to cryptocurrency trading platform for thousands of traders who prefer having full control over their trades, as well as transparency and security. And along with the premium user experience, the platform offers up to 100x leverage on all of its trading pairs, such as Bitcoin, Ethereum, Ripple, EOS, Litecoin, and exclusively Yearn.finance. Now, a unique feature they offer, unlike other exchanges that allow for unfair liquidations and price manipulations, is their AI-based MP Shield technology by MARGEX. Now, MARGEX came into the space of cryptocurrency to bring crypto leverage trading to a new level of comfort, and while getting rid of complicatedness. Now, MARGEX is the first community-driven cryptocurrency derivative exchange that any trader can participate in building their dream trading platform. And a few features of MARGEX is that they offer no KYC, they have lightning-fast order execution, no lags, overloads, or even order submission orders. Now, they also have very high liquidity backed by 12 liquidity providers, and there is no maintenance time, which means all platform updates are done instantly. Now, MARGEX is even easy to sign up, and the platform is easy to use, and it's really not complicated to start and advanced enough for pretty much all the pros. Now, they even have the friendliest to use UI in the industry, and all deal indicators like trading fees, financing, P&L are actually on the screen available in real time for any deal. Now, MARGEX also has a simultaneous use of stop loss and take profits for each trade, which means there's no need to check what's happening every minute. Now, the unique MP Shield AI-based system protects users from price manipulation, which prevents from unfair liquidations. Now, the assets price on MARGEX never deviates from the top spot exchange, and MARGEX offers traders a profitable affiliate program amongst most trading platforms in the crypto industry. Now, the crypto-founded website renders advanced trading fees that have a 40% cut from the crypto investors' referrals. With these low trading fees, MARGEX provides traders with an enhanced referral arrangement, which will actually help them from profit instead of rendering high affiliate settlements on the platform. So guys, for more information about MARGEX, definitely make sure to check out the links in the description of today's video, where you can find their websites and socials like Telegram. Otherwise, shout out to MARGEX for sponsoring today's episode. As always, make sure to smash the like button for the YouTube algorithm, turn on post notifications, subscribe, and I'll see you guys in tomorrow's video. Peace.